Guys, let me know if you can hear me okay. Bought a webcam over the weekend, has a microphone on it. Oh, term equals termination. There we go. Sorry, language. My bad, Victor. It's early. I'm speaking in really short words. Guys, great to see you. Hope everybody had an outstanding weekend. Let's get right into it. Market's moving. We're going to try and move with it. Has a little echo. Sounds different, but it's okay. Here, I can change it. Hold on. Ooh, you know what? Hold on. Let me double check. Give me 1 second. Give me just 1 second. You know what I think I did is bum bum bum. Let me make sure. Microphone format, webcam. Did that help a little bit? Am I in the mountains? Well, I am, but that's not what's going on. Hold on just 1 second, guys. Let me get to sound. Microphone. Here, that probably sounds better, doesn't it? Yeah, I think what happened, guys, does it sound better now? What I did is I changed it in my YouTube thing, but not here. So it was coming through the headphones. Now we're coming through the headphones completely. Does that sound better? We'll just use the headphones. I want it to be the best sound, so we'll do that. Guys, let's check out news. Now that we got through that, right? Uh, hope everybody had an awesome weekend. Had a good one here in the Pacific Northwest. Guys, today is Monday, August 4th, and at 10 a.m. we've got factory orders. It's low impact. Nobody's really too terribly worried about it. Tentative loan officer survey. Guys, we're looking each and every morning at forexfactory.com/calendar. And what I'm looking for is high impact news, something that could disrupt the market, something that could affect my patterns. And that's all we do, guys, is we look at patterns, and patterns repeat, whether the pattern is having momentum, whether the pattern is recognizing a termination condition, whether the pattern is finding your entry. Guys, the market just moves in patterns. My job is to teach you to look at your indicators and to recognize some of these patterns. Specifically, what we call a high probability trend trade. We're going to start with NinjaTrader, as we always do. We'll get to TradingView a little later in the day. Guys, there's a pattern. I like to call it a pattern because it is a trade, right? But a trade is a pattern, and that pattern needs to be proven that it wins more than it loses. So for all of you brand new users, we talk about one pattern specifically first. It's what we call a high probability trade. It's a high probability trend trade, and this is a trade where each indicator on every chart is going to agree with the rules for the trade, guys. And it doesn't matter whether you're NinjaTrader or whether you're TradingView. When every indicator lines up for the trade, that's when we have an edge. That's when we have an advantage. If you've ever watched Mark Douglas, he was the guru of trading psychology, that's what he used to talk about. He used to talk about trading is about having an edge, being able to see a pattern that you can take a sample, that you can look at, that you can prove wins more than it loses. Guys, this high probability trend trade, as taught, is a trade that has the potential to win up to 70 to 80% of the time. It's only 3 rules, and each rule, when true, creates an advantage, guys. So the recipe for a trade is momentum from rule number 1 being true, strong triggers, plus a clear path from rule number 2 being true, no terminations. And then finally, it's just defining an entry. It's defining an entry that reduces your risk, defining an entry that increases your profit potential, guys. So these 3 rules come to be on only 2 charts. You're going to have a large chart and a small chart. Your large chart is going to define the direction of the market using the background color. If it's green, we're going up. If it's red, it's down, looking for rules to be met that direction. Your large chart will define momentum through rule number 1, strong triggers. And your large chart will let you know whether or not there's something in the way that could mess up your good time, guys. And when there's none, we're going to call it a clear path. When the large chart rules are met, you're going to go to a smaller chart, a faster chart. This is a refinement chart. This refinement chart is going to allow you to take all that great information that you'll see inside of just one bar, and you are going to pinpoint where the market is most likely to continue with the large chart trend, where the market is most likely to bounce and go up if it's up and down if it's down. And guys, by using this refinement chart, what it does is it increases the profit potential because it puts you into the market furthest away from your targets, but it also reduces risk. By pinpointing precisely where the market is most likely to continue, guys, you begin to understand exactly where the market should not go, and stops get smaller and smaller the more you adhere to rule number 3. We're using these two charts. They really are just a reflection of who's in charge and really who you should be trading with, right? So the large chart is the large crowd. It's the men and women. Some people call them the institutional traders. These are the people that trade millions and millions of dollars. They create trends. When they want it to go up or down, that's exactly what it does. They establish momentum. We see it through strong triggers, very identifiable, but they're creating a push in the market that's going to be very, very difficult to stop. And these are the same folks that are reacting to the key areas on that large chart, showing you precisely where bounces and reversals may occur. Large crowd typically wins. Small crowd loves to fight the large crowd. This is your small chart, your refinement chart. And what you see is the small move inside of the big move. And we call that a retracement. A small movement counter to an underlying trend is a retracement. Guys, we use the small crowd, the small charts fight, to pinpoint precisely where the market is most likely to bounce and continue with the big chart advantages. The small crowd typically loses 70 to 80% of the time, which means when we're following the rules for the high probability trend trade, we have the opportunity to win up to 70 to 80% of the time. And that's what we're going to talk about first. This isn't the only trade. This is the first trade. And the first trade gets you focused on these two core advantages, momentum and path, guys. Really work on momentum and path, because when you have it, when you see it, when you understand it, you really do have everything you need to make a very successful, consistent trading plan. So we're going to say when momentum is present through strong triggers, when the path is clear because there's no termination conditions, and when you can define your entry area, you're in what we call a high probability trade. Each indicator on every chart agrees with the trades. Because you'll be looking at your charts and speaking out in terms of advantages, when one goes away, you'll be able to say that you're in a medium probability trade. If two go away and you still decide to take it for whatever reason, you are in a low probability trade. So you will be in control of your entry. These guys are in control of everything else. But you decide whether or not you want to enter that market. You decide whether your rules are true. You decide whether it's worth the risk in the scenario. My job is to teach you to recognize these advantages so you can make those good decisions, guys. When you know what's working for you and you know what's working against you, it helps you make decisions not only on deciding to enter, but also how aggressively you may need to manage it. So as we go through the first 30 minutes or so, guys, we're going to learn those trigger line and Fibonacci rules for when it's okay to trade. We're going to talk about identifying momentum. We're going to learn a recipe for identifying termination conditions. And then we'll go through the entry sequence as well to make sure that you're comfortable. In the room, I've already posted it. I'm going to do it again right now. I have dropped trading plans and study Excel spreadsheets for both platforms, guys. Whether you are on NinjaTrader or whether you are on TradingView, Nexgen provides you a plan, a way to go and study all the indicators, even a trade tracking sheet. There's a step to becoming confident ASAP. So, and I'm really talking to my new people. Welcome to the room. DD Dasgupta. I know it's D Dasgupta. Sorry. this room is designed to be a discussion. I get a little lecture every now and then when I go through a lesson, but guys, this room relies on feedback. It relies on participation. Your journey becomes easier when you post in the room and accept a little feedback, guys. So simulate and practice. Post in the room until you're sure you're following the correct rules, because the correct rules have been proven to win more than they lose. We're also going to simplify. The plans that I've dropped in the room are very basic. They're very focused. There are checklists for entry. None of the checklists contain more than 4 items. Your job is to learn the looks so that they become easy. That's where those spreadsheets that I put in take place. If it is the Ninja Trader, guys, it's the basic rules. It's strong triggers, clear path, and an entry, all in green, exactly what it looks like when the rules are met. Over 500 pictures of Nexgen users using those rules, that pattern. There's a place to build your plan, to work on your management, to talk about the things that you see. And then there's a trade tracking sheet. And the trade tracking sheet is on both, guys. And there's a spot for you to put a chart in, to talk about what you saw. And then most importantly, to talk about the feedback that you got in the room. Because very often, and guys, I say this with the utmost truth and sincerity, very often the mistakes that you make can be fixed with minor adjustments. But if I never see where you're making a mistake, if you don't tell me how you're reading your indicators, if I can't see that maybe you got in a little earlier, maybe you jumped out a little earlier, maybe you're trading in determination conditions thinking it's a momentum trade when the rules aren't met, guys, we can't have that conversation. So do me that honor. Tell me what you see. Tell me why you did what you did, and let's talk about it. And my goal isn't to chastise, isn't to bust you down, guys. I will celebrate every victory, but we will correct things that need correcting. If you're using the spreadsheet, you're going to see that feedback, and you're going to start to see the patterns that are bringing you success, and you're going to start to see the patterns that are kind of taking that success away from you. So both, both platforms have a spreadsheet. Both platforms have a tracking sheet, guys. So if you're on NinjaTrader, use the NinjaTrader one, the Nexgen tracking sheet. If you're on TradingView, use the TV Trade Journal. It will be helpful. So post in the room. Use that spreadsheet. Take 1,000,000 pictures, guys. And we're going to talk about the rules real quick. We're going to go back and forth in the live market. We're going to do it on both platforms. I'm going to give you everything in my arsenal to get you where you want to be. But I'm also going to let you know that simple is easy. Simple is the way to go as a brand new user. Focus on doing one thing well. And then from that one thing, all other trades spring. So indicators. Both of your charts, large and small, will have trigger lines. So just a little introduction to what you're looking at, guys. There are small triggers, 2 solid lines. There are large triggers, 2 dashed lines. These work together. They work together to first establish the strong trigger look to make sure you have the advantage of momentum. You will use trigger lines every time you reach an area to understand whether it's a termination, has the potential to break, or if that area has broken and found itself in the rearview mirror. On NinjaTrader, you're even going to use these large triggers for entry points. So triggers show up everywhere. Just know the difference between small and large. And then we also have areas, guys. And areas are horizontal lines on a large chart. That's the easiest way to say it. You're going to see Fibonacci resistance, Fibonacci support. The red and blue lines run horizontally. You're going to see divergence, highs and lows. Every time you see a negative number and a magenta line from a high, or a negative number and a cyan line from a low, understand that there was a loss of momentum. That's all divergence is for us, guys. It means loss of momentum. You're also going to see yellow 1-to-1s depending on the trend that can act as resistance or it can behave as support. And then you'll see that mid-band running through the middle. This is a moving average. When price is above it, it's green. It can behave as support. When price is below it, it turns magenta. It can behave as resistance. There's all your areas in the room. Let me give you the trigger lines as well. No reason to not know what the tools are, because the tools are where we're going to get the reads. And the first read that you're going to get, ladies and gentlemen, is strong triggers. Strong triggers gives you the advantage of momentum. And when we have the advantage of the momentum on that large chart, guys, that price is hard to stop. The market's difficult to slow down. So in an uptrend, when the background is green, both small and large triggers must also be green. In a downtrend, both small and large triggers must also be red. Momentum is defined as when the small triggers in an uptrend break up and away from the large triggers. The space created between the two lets me know that the odds are favorable for the market to continue up. Odds favorable momentum, guys, that's your advantage. That's the one that pushes a market, that can break areas, that can cover mistakes. In a downtrend, smalls below the large, space between, looks like scissors open, ready to cut. Guys, this is your first advantage, the advantage of momentum. Recognizing that the odds are favorable for the market to continue in the direction of the trend, you're going to see it annotated on charts, OFM, odds favorable momentum. But momentum goes away. Smalls work inside of the large, we call this weakness. And when you have weakness, anything can happen up or down. So I am a big fan of language, guys, and what you will find is that you can either have strength, where the odds are favorable, or you could have weakness, where anything can happen. It should be pretty self-explanatory on the decision-making process. So let's look at crude oil right now. My smalls are below my large. There is space between and the colors match. Can you give me a Y if you can see, well, and it's going away quickly, that does fit the description for momentum. Smalls below the large. And now you can see them trying to transition, guys, but we are in the moment traders. And in the moment, we've got what we need. And whoops, and now the colors don't match, and that changes. I need to reload. I had a little bit of a crash. That is your first advantage, guys. That is the strong advantage. That is the one that is so difficult to stop. But there is something that can stop it. It's a termination condition. And a termination condition happens at one of those horizontal lines on a large chart, because that's where these guys and gals, this is where they make decisions. This is where they enter. This is where they exit. This is where they fight. And even when they break an area, very often you will see their fight right at an area. So we're going to use areas on the large chart to define trouble. And everything begins with a large crowd getting to trouble. So when I say large crowd gets to trouble, what I mean, whoops, that opened up on the wrong monitor, is that price reaches Fibonacci resistance, or price reaches Fibonacci support. And once price reaches a line, once price makes it to resistance, yellow 1-to-1s, a divergence high, support, yellow 1-to-1s, a divergence low. Once that happens, all you have to do is ask yourself, where are my triggers? That's it. Triggers tell the story. Price sets off the decision. Triggers tell you the most likely decision. And if price reaches an area and 4 lines of the triggers, both small and both large, remain below resistance or above support, rule number 2 is not met. That area in the moment is behaving as a termination condition. And guys, it will be a termination condition pretty much every time price reaches it. It might be a termination for a minute, for a second, for an hour. But if price reaches an area and absolutely no triggers break, sit on your hands. Do nothing. That is going to be your path of least resistance. And we're just going to count triggers. So, when price reaches an area, in this case, it reached these yellow 1-to-1s, you're going to count triggers, guys. And if the answer is 0, none of my trigger lines have made it through, I want you to assume, I want you to believe that that line is going to halt any and all forward progress, and it would be just the path to financial suicide to take a trade into it. Because you can see that it did it there, and it also did it down here at support. Guys, you know about these long before you ever get to them. If 2 of your trigger lines, too small, smash above the area, you have momentum. Guys, this area has the potential to break, but it's just potential. and it's not even great potential. It's a pretty iffy look. If 3 trigger lines get through, 2 smalls and 1 large, now that potential to break starts to fall into place. This is where you're going to have a better chance of getting that Fibonacci breakout. And then finally, if 4 trigger lines, both small and both large, get above an area of resistance, that resistance behaves as support. It is now broken. If it gets below an area of support, that area of support behaves as resistance. It is now broken. So when we talk about termination conditions, 2 triggers through, huge bounce up. No triggers through, huge bounce up. And guys, look at this. Price reached the divergence high. 4 trigger lines remain below, and you can see the reaction on that smaller, faster chart. Can you guys give me a why? We're just talking basic termination conditions here. If price reaches an area, let's count triggers, guys. And when support breaks, it behaves as resistance. Look at this. 1, 2, 3, 4, 5, 6 hits on Fibonacci resistance, and crude oil can't get up past it. There's your hit on the divergence low, all the triggers above, and the market couldn't get past it. Weak triggers at a fib, giant retracement. Odds favorable momentum and nothing in the way, and sure enough, the market continues down. Fibonacci support, holding like a champ, creating an untradeable retracement. And then if we get back up, weak triggers is where that move down starts. From resistance to support to resistance to support, and then finally the breakout up, guys. I'm telling you, once you learn rule number 2, once you learn to believe rule number 2, it's going to force you to be patient, but what it's really going to do is it's going to keep you out of a world of trouble. All right, guys, that's your large chart. That's your big chart. That's your slow chart, momentum and path. I'm going to tell you guys right now, if you're brand new with me, it feels like a lot to take in on day one. I know that it does. Keep it simple. Learn the language a little bit over a day or two. And then what happens is it all starts to click and it all starts to make sense. But everything starts with momentum and path. Once you have it, you're going to use a limit order to buy or sell a pullback in an area inside of triggers. That's the rules for rule number, or the language for rule number 3. You're going to use a limit order, which means you're literally going to wait for the market to come back to you. That's that fight from the small crowd. And you're going to wait right at an area, at a fib, at a mid-band, at a yellow 1-to-1. But those areas must be inside of triggers because triggers define where the retracement is most likely to occur. Triggers define where those down bars are most likely to go. Areas within define where it's most likely to bounce. So your best of the best look is when your large triggers, which are native to the 5-1, I'll show you how it looks on a large chart. If I circle my large triggers, they're smooth, they're right there. And I circle my synthetic triggers, you'll notice that the synthetic triggers are the large triggers on the large chart, and price returns to those triggers. And the large triggers are native to the small chart, and price returns to those triggers. So when we're looking for an entry, we're going to use those trigger lines, large and synthetic, from both time frames in the exact same spot to give us the greatest amount of accuracy. And we call this favorable large triggers. That's the best of the best. And when looking for a trade, it looks just like this. First, the large chart rules are met. That's so important. And I'm going to show you what it looks like. We'll use that large crowd picture. When the triggers are strong and when there's absolutely nothing in the way, you're going to go to your smaller, faster chart, and it's going to be going up without you. And your fear of missing out is going to kick in full tilt, guys. And you're going to say to yourself, oh no, how will I ever get paid? I'm supposed to buy a pullback. And then the magic starts, guys, and the small crowd shows up. And this reversal bar is the beginning of the pullback. And that reversal bar signals the beginning of the fight. And that reversal bar is even when it closes on the wrong side, the right, well, the not left side of these triggers. That's a little wordplay there. This is a loss of momentum. And that loss of momentum is just what we need to get back to our entry. So the reversal bar begins the pullback. The reversal bar is not your entry. You can define where the pullback is most likely to go by using the triggers, large and synthetic. The tighter they are, the smaller that space. But you're going to look for entry location, areas inside of triggers. And I want you to learn that language from day one. Buy or sell a pullback at an area inside of triggers. And what happens is you will start calling your shots as the market is moving up and you're waiting for that reversal bar, because you can look over and you can see those triggers and you can see those areas. Guys, sometimes there's multiple areas and it creates a little window of opportunity is what I like to call it. Somewhere from the highest point of support inside of those triggers to the lowest point of support inside of those triggers, that's where the market is most likely to bounce. That's where the market is most likely to continue. But because of the large chart advantages, because of that strength, and absolutely nothing in the way to create a bounce, your job will be to activate a limit order, tick or two above that highest point of support, and just say to yourself, you know what, small crowd, do your thing, come get me, I know exactly where I want to enter. Can you guys give me a why, if that makes sense? We are going to use that refinement chart and we are going to get accurate. You are going to pinpoint your entries and call your shots. And it's really not uncommon to see you guys buying and selling like the high tick or real close to it. When everything says down, when the momentum is strong, when the path is clear, we go to the smaller, faster chart. Only when the rules are met. Otherwise, this is like the siren song and it'll talk you into some nonsense. Reversal bar begins the pullback. It is not your entry. Trigger lines define the retracement zone, not your entry. Areas within triggers, fibs, midbands, yellow 1-to-1s. This is where the trade originates. This is where the market is most likely to bounce and continue with large chart advantages. This is where the small crowd is most likely to fail. I'm going to activate a limit order, a tick or two, below that area. Guys, this is all NinjaTrader. And now I'm going to show you the cool thing about rule number 3, because not only have you defined where the market is most likely to continue, by doing so, where'd my picture go? By doing so, you have defined where the market should not go. And your initial stops in the KISS plan that I gave you, the super simple plan that I gave you, say that your initial stops will go 4 to 5 ticks beyond those trigger lines. And your initial stop is 4 to 5 ticks below those trigger lines. Because if you get to the other side of the retracement zone, if you get through all the areas most likely to create a bounce, guys, the advantage is gone. The edge is no longer present. You're going to want to take that loss. You're going to be excited to take that small loss rather than hoping that the market decides to reverse from the middle of nowhere. Because once you get to the wrong side of the triggers, whether it's above them in a short or below them in a long, the advantage is gone and you just don't know if, when, or where that market is most likely to continue in the direction of the trend. So by learning the rules for entry, you've started management, guys. And they say that intelligent traders, that experienced traders, manage risk before they ever manage profit. And you get to do that by insisting on momentum. And you get to do that by having a clear path. And you get to do that by defining your entry right where the market is most likely to bounce. So guys, that's your NinjaTrader run through on rules. And let's go through it. Smalls are above the large, but the large aren't very wide. I'm directly into Fibonacci resistance, which means no matter how much I wish this pullback to support inside of the retracement zone is my long trade, I don't have anywhere to go. I've got a big red line that's already held 7 times. Do I believe that it's going to break for me this time, or do I sit on my hands and wait for that path to clear out? That's a decision that you're going to have to make for yourself. That's something that you're going to have to work through. But I can tell you, if you go back and you talk advantages, your work gets a lot easier. So in the S&P, I do have momentum. Smalls above the large, space between the two. What I don't have is a clear path. So I am all the momentum, none of the path. If I chose to enter the trade, they never went where the market shouldn't go. So all I had to do is say, one of the three is missing. I could take this as a medium probability trade. I could manage it assertively. Um, and it seems to be working. And we'll see what happens when they get back to the divergence high with absolutely no triggers through. It's the second test of that termination condition. Does that make sense, everybody? That's your live chart read. I don't have the rules that I need inside of my plan to pull the trigger because in this room, there we go, I am bound by law to stick to this plan. And this is just an educational room. I refuse to tell you guys when to trade. I won't tell you when to get in. I will not tell you how to manage your trades. What I will do is hand you a plan with easily definable rules so that you can make those good decisions, guys. So this KISS plan is a stepping stone in your learning journey. It's designed to optimize your chances of success with that high probability trend trade. It's designed to teach you to read your indicators. Through simulation study, class feedback, and continuous practice, you will build your own plan. There's no doubt in my mind. And it'll be based on your experience reading the indicators. And when we start going back and looking at the charts presented in the room, you're going to notice that there are people that are not taking high probability trend trades. That's okay. They're just in a different spot than you. If you build your great foundation, you'll be surprised at what you see in the near future. So 2 charts. Define your entry. Great entries create manageable trades. And as mechanical as your entry is, if I have strong triggers, if there's nothing in the way, I'll define my entry. Your management can be just as mechanical, guys. And the management plan for the KISS plan is right here in that spreadsheet. I'm going to show you what it looks like because it is dependent on learning entries. If my entry is 2 ticks below resistance inside of triggers, then my initial stop is 4 to 5 ticks above. Guys, this KISS plan is designed around 2 contracts. It's designed to teach you stop placement where the market should not go. And it's also designed to teach you to trust the large chart and learn how to get paid. So many traders don't want to get paid. They want to hold for the giant moves rather than just taking what the market gives them. So this gets you focused on making money as well. If this is my entry, this is my stop, and that is it. I either get stopped out or I don't. Targets are predefined at $100 and $200. If I don't get stopped out, it means that I got a reversal bar or a confirmation bar, confirming that the market is going down with momentum, down with a clear path, and down from the area where it's most likely to go down from. Guys, this redefines where the market should not go. Your initial stop had approximately $150 per risk of risk per contract. Your new stop after the reversal bar has you down to $30 risk per trade. Great entries create very manageable trades. If you don't get stopped out, and sometimes you will, it means that it went to your first target, and your first target is only $100 away from your amazing entry. And it's not uncommon to see you guys hit first profits on the reversal bar that had the first stop placement. Guys, once you make $100, it's in your account, it's yours. They can't take it back. It's there. And you're going to go break even. And you're going to say, I have zero risk on the trade. I've already been paid. And I'm learning to trust that the only reason I took this trade in the first place is because of momentum and path. So if you don't get stopped out break even, and it'll happen every now and then, it means that it went to the second target, guys, and that's a $300 trade. It's not a $300 day. It's a $300 trade. And a $300 trade, if that's the best you do every day, is a $75,000 year. Small profits, base hits, pay bills, guys. Your second trade in the plan is when 3 triggers break through, but it's not a clear path. Talks about how to get in, talks about how to manage. And sure enough, off they went right off the open. They did break it. And then they gave you momentum and path. And oh, probably didn't get the entry for most of you guys because it didn't quite hit that mid band inside of triggers. And then crude oil. Here's the exciting one. Will you guys give me a Y if you see that that red fib did not break with 4 triggers below it, that red fib stopped all forward progress? And if you hoped it would magically break, guys, you're in a sad state right now. Every rule that I teach each and every day, every rule that I teach each and every day isn't based off of like a day's worth of looking and hoping, guys. It's based off of tens of thousands of pictures and repetitions within the market. So more often than not, a line with no triggers through stops your forward progress. There will be times when it breaks. There will be times when poor trades win. There will be times when great trades lose. That's part of trading. That's where consistency comes in, guys. Have a checklist. Keep it the same every time because it produces an edge. Let's go to the NASDAQ. Holy upswing. So, guys, your trading view is a little different look. Your trading view is a 15-minute bar and a 1-minute bar. These are much slower than Renko. There's a lot that can happen. I'm constantly breaking up. Guys, am I breaking up for everybody or just Ron T? I am breaking up. Guys, you have to tell me when I'm breaking up. All right, let me do this. I'm good with you, Paul. Let me reload on my end real quick, guys, and see if that helps. So I'm going to kill Discord and then just come back in. And usually that cleans stuff up a lot. Andy, you're good. So it's intermittent. It depends on who's listening. All right, getting back in. Let me get over to the room, guys. 1 second. You can probably hear me. One of the things that happens, guys, is Discord, whether it's your internet, there's different things that can happen. So I just reloaded. Is that a little better? Does that sound better? Hopefully that was the fix that we need. You can hear and the sound quality is awesome. Okay, good. Cool. Yeah, guys, don't be shy. Just let me know. Sometimes, usually it's Discord. It could be me, but it happens. Just thought I may be a little bit, Steve, just a little bit. But most of the friends in my head aren't, so it's okay. Guys, it's a different look, but it's all the same concepts. You still have small triggers and large triggers. You still have divergence and one-to-ones and mid-bands. The only thing that's really different is the bar structure, which is minutes rather than Renko. And you'll have these zones, support and resistance rather than Fibonacci. Essentially, treat them the same. There's no reason to trade directly into an area. It could stop your forward progress. There's a little different read on the large chart, and I want to give it to you guys. And let me go and find the right picture. This is my order of operations on TradingView. Every time I look, I go to the large chart and I ask myself, what direction is the market going, guys? If it's red, it's down. If it's green, it's up. It's a pretty solid indication of the thought process. But then I ask, because it's a much larger chart, I ask, what direction are my small triggers going? And guys, I like to draw an imaginary line in my head. You don't see the charts? Let me stop real quick and reload it. And there's a stream refresh. Did that get you? No. Guys, can everybody else see my charts? Let's try that one real quick. Yes. Um, Mr. Dasgupta, I would try logging out and maybe logging back in and see if that fixes it. My camera must be working. Everybody's on it. Not quite familiar with Discord. Nope. Discord is amazing, but every now and then it gets like a little glitchy. If you want to try and log out and log back in, you should be able to catch me. And if not, we'll figure out. We will figure out what's going on. So guys, when you're using TradingView, what direction is the market going? It's clearly down. What direction are my small triggers going? Clearly down. Guys, everything says short. So I'm looking for short trades, but there are 3 places where price can be in relation to those trigger lines. You got it back? Awesome. Very good. You can be left of the trigger lines, and this is the strong side of the trigger lines, guys. This is where all of your shorts are the easiest. This is where the home runs are hit. You can be in a transition where the smalls work inside, or price works inside of the small triggers. And this is kind of what you'll see before a reversal. So you just get your guard up a little bit. We're still only looking for shorts, but maybe we manage a little more assertively. And then we have the weak side over here on the right side of the triggers. And guys, that weak side, still looking for shorts as long as they're down, but I really want to make sure that my 1-minute chart is in favor. I want to make sure that I'm not fighting anything on the 1-minute chart. I'm not fighting the small triggers. I'm not fighting the large triggers. I'm not trading into zones. So your large chart read right now on the NASDAQ, it's trending up. Let me pull this down. The market is trending up. And if I make my cool little arrow, my small triggers are up. And does everybody see that I'm on the strong side of those small triggers? TradingView people, give me a Y if you see it. The trend is up, the small are up, and I'm on the strong side of the small. Guys, that's a great look. Does everybody see those pink 1-to-1s? The final question that I ask, everybody can hear me, right? We'll see if Brian can get us back in. Guys, the final question that I ask is there anything in the way? And guys, these pink 1-to-1s are in the way. And you can even see it over here. There's a zone. Guys, my rules say don't trade into things because things can stop the market. How's that for technical? So for me, if I'm looking for an entry to go with the trend, to go with the triggers, I don't want my entry to come from below those pink 1-to-1s. I want my entry to come from above. I want to be on the other side of trouble. Does that make sense, everybody? So the large chart read is a little different. It's not necessarily waiting for the triggers to get above. When we're up, when we're strong, when we're good, let price get through the area, get away from the decision-making zone, and it's going to make life a lot easier on you. So if we go to the S&P, probably the same read. The trend is up. The small triggers are up. I'm on the strong side of the small triggers. And dagnabbit, there's pink 1-to-1s here that are creating little bounces as well. Crude oil traders. The trend is down. The smalls are down. Let's make this bigger for you. I am on the weak side of small triggers. And there is absolutely nowhere to go. Do you guys see it? Hit and stopped. Hit and stopped, hit and stopped. So my only option, if I'm going to go short with the trend and the triggers, is I'm trading from the other side of trouble, making sure I have room to targets. Everybody good with that? Love it. Damn termination conditions, guys. Whew. Strong trending markets. Egads and little fishes. So welcome to Nexgen. That is my first 30 or 40 minutes, guys, every day. I talk about the rules. We go through them. And then we just start clicking on the pictures that you guys have posted. Remember, I'm not the trade police. I don't have any desire to be the trade police. I will look at your charts. I will discuss on every chart, can't stress this enough, momentum, path, and entry. Every chart presented. If you're taking a trade that is not a high probability trend trade, I'm still going to talk about momentum, path, and entry. If you're taking just a momentum trade, I'm still going to talk about momentum, path, and entry, guys, because that is your core. And when you get that core, everything else shows up, guys. Everything else just seems to fall into place. So I will take pictures of your chart, and I'll drop this bad boy on it. Dun, dun, dun. So Pete gets us going. And Pete talks about what he sees, and I love it. And guys, this is what I need. The market reversed. It's a weak top, meaning that it didn't come from a termination condition. He had strong triggers, and he didn't get to trouble yet. And guys, Pete takes a pullback right to an area inside of triggers and rides that momentum and path all the way to Fibonacci support. This is where we high-five Pete, and we say, Pete, you took the highest probability trend trade ever. Your entry is perfect. Your risk was virtually nothing. And guys, that is a huge trip all the way down to Fibonacci support. This is one of those trades where I would take a picture of it if I were studying how to recognize these patterns, and I'd drop it on my spreadsheet, guys, and I would say, this is your perfect look. This is the easy one from Pete. Recognize that pattern. That's the pattern that wins more than it loses. Strong triggers, clear path. Pete, it looks like you're missing synthetics on your large chart because you did have a fib right here. And you go to take the momentum trade, and this is not a momentum trade. Ladies and gentlemen, the momentum trade rules say, let the small triggers and price break through and sell a pullback. Instead, Pete, unfortunately, you had to sit through $400 worth of drawdown to get you to the perfect trend trade. Half off at 10 ticks. I can't see what your entry price is there, but it looks like it's 31. So it's really 4 contracts off at 3 ticks. It's $120. And now this one gets to start making money down to trouble. So one of the things you guys do when you take these just jump in trades and there's stuff in the way, it just bounces right back to the trend trade when it looks like this. You're missing out on a lot of profits when you do that. There it is again. Directly into trouble, and it bounces back, turns into the trend trade, and then Pete gets to make it. So from 24 to 29 is only 4 ticks, and all 4 of those contracts come off, and you have to think of it that way. I'm risking hundreds to make pennies on the dollar. Waiting for the trend trade makes it much easier. Nice trading, Pete. And then without momentum, no areas inside of triggers, clear path is the only thing working. Pete says, I'll just try to go with the trend. And instead of just jumping in from the wrong side of the triggers, he gets in on the way up and is able to make a little bit of money. Nice job, Pete. And guys, that's what we're going to do on every trade. We're going to talk about momentum. We're going to talk about path. I'm not going to beat you up for breaking rules, but if you do break rules, I'll point it out. Because there's nothing worse than getting lucky on simulator to find out that luck runs out once you go live. Trading directly into terminations. Getting back in. Nicely done. All right, Victor. Are these the same? Nope. All right. 2 trades on the screen. The first trade, odds favorable momentum, clear path, and I'm not sure which entry this is, 47. So this is it. Getting in at the mid-band inside of triggers and getting paid. Nicely done, Victor. And then the second trade, odds favorable momentum. The fib hadn't printed yet. Clear path. In just below resistance inside of triggers. Great stop placement. Easy money all the way down to the fib. Victor, rock star trading both trades. Great job. Miss Jen doing the same thing. Odds favorable, clear path, divergence doesn't scare. Perfect entry. Easy money on the way down, Jen. Nicely done. You guys see that? Pull back to an area inside of triggers with momentum and path. Pull back to an area inside of triggers with momentum and path. Pull back to an area inside of triggers with momentum and path. Pull back to an area inside of triggers with momentum and path. Over and over and over. Different time zones, different backgrounds, different educations, different favorite ice creams, guys. And it's just a pattern. Once you learn the pattern, you're on your way. All right, Paul. So here's Trading View. And watch this. We'll go through it. What direction is it going? It's going down. What direction are the small triggers going? The small triggers are going down. Where is he in relation to the small triggers? He's on the strong side. Guys, everything is screaming south. Paul's small chart has the strongest triggers ever, and it pulls right back to a pink HVA line. So Paul, I don't know if you recognize this in the moment. I have a feeling that you did. No terminations on the 15. Both charts strong triggers. Any pullback to an HVA line for entry. Guys, this is one of those examples where the perfect look just doesn't work. And it's virtually no risk. And when it fails, it looks like you get out for a couple ticks. Paul, this is an awesome trade. And it is perfect execution. And it just didn't pan out this time. Told you guys, sometimes great trades will fail. And sometimes horrible trades will win. All right, Victor. We kind of talked about this one in the room. You're welcome, Paul. So here we're looking at the long. Momentum? Absolutely. Small's above the large, larger wide. Life is good. And every trigger is above this fib too, right, Victor? So you're thinking, yes, I have what I need to take a long. And this is one of those things, and I don't know if this happened to you, but I've done this before. I get so excited about these triggers going above that I forgot to count trigger lines when it hit 2 areas of resistance. So it's 2 termination conditions right above you. And then Victor, the gap theory as well. And guys, there's this look called the gap theory. Let me show you what it looks like. So the gap theory says, if price accelerates away from those large triggers, here's an example from earlier this morning, and hits something solid, whether it's a fib or a mid-band, if the large triggers remain a full bar away, the price is more likely to close that gap to the large triggers. Guys, this theory is the same reason you get amazing entries, because price returns to the large triggers. And what you didn't catch, and guys, it takes a little bit of study. Victor, you also had the gap theory. So it was 2 terminations plus a market that was more likely to close the gap. This is what I would call an avoidable loss. With a little bit of study, you'll stop taking that long just because it's not the right trade. Does that make sense, Victor? Good stuff. Man, I know this sounds silly, I love losses. For the brand new user, I love losses because losses are how we grow. Losses are how we get better. Making a mistake, right? Missing a read. And guys, this is where annotation is so important as well. Because if something happens that you missed, you'll go back with a fresh set of eyes, with no adrenaline, no anxiety. So Paul didn't enter short on the 1 minute two. You wanted to, but it was into the outer band. So you had everything set down, right? 68, 68, 68. But you were right at the outer bands, and you were right into trouble. And then, Paul, the one thing, we don't teach a jump-in trade, right? So if you are just going to jump into the market, make sure you have somewhere to go. Make sure you have room to make money. And you said, I just don't feel like I have enough room. I like that. It's a good read. Once you have momentum and path, guys, room to 55, Paul knew that he should be going short. He just couldn't find a way to get in that gave him enough risk or enough money to justify the risk. Because where do you put your stop if you just jump in? There's nothing to protect you. Like, there's no one-to-ones to put a stop behind. There's no pivot to put a stop behind. And your stops become arbitrary numbers that you hope don't break. And this is a good example up here, Paul. Do you see it? If you just jumped in here, look what happens. How do you manage that? Where do you manage that? And I always ask myself, how am I going to manage this trade? What kind of trade is it? Where does my stop go? How am I going to do this? And I think you did a great job by not just jumping into that trade with no room to make money. Hope and luck management. Man, that's never worked for me. All right, Miss Jen, strong trending market. So let's talk about what Jen means when she says strong trending market. A strong trending market, guys, is defined as a market where your large chart has moved 30 bars or more and has not produced a reversal bar. And what this means is that just the buyers are killing it, and nobody can step in the way and stop them. Well, every now and then someone tries. So the general rule is when you have a strong trending market, just assume that momentum is on your side. And if there's absolutely nothing in the way, keep buying the mid band until it doesn't work. That's the strong trending market. Jen says, I'm on the wrong side of the triggers. That mid band's floating in space. Instead of just buying the mid band, I'm going to let it confirm. I'm going to take an up bar and then I'll go with that strong trending market. And you did it beautifully. Bought a reversal bar marker to ensure mid-band can define risk. 2 ticks below. Jen, perfect execution. And that is all the pictures that we have. Let's go to the live market. Whoa. Price reached Fibonacci resistance. Pulled all the way back to yellow 1-to-1s to the tick. Large triggers didn't follow. And guys, sure enough, it went up. Rules 2 and 3 not met. Because of the termination, you're no longer in the buy the mid band until it stops working. Because of the reversal bar, you're no longer in the buy the mid band until it stops working. So Jen, because of the termination, buy the mid band until it stops working, isn't it? Your Snagit your Snagit's being weird can't paste the link. That's okay. This works just as fine. So Jen chose not to trade into the termination. Seems like an outstanding choice. And then the thing that Jen's got to deal with now is the remorse of that going up. And Jen's brain is going to tell her, hey, Jen, if you would just trade into these termination conditions, look at the money you would have made. Hey, Jen, if you just ignore these red fibs, you can be more active. And Jen's going to say, whoa, brain, pump the brakes. Because rule number 2 is here, because about 70% of the time, fibs create losers. Trading directly into Fibonacci areas creates losers. So good job, Jen's brain. There's always more, right? There's always another trade. Always another trade. Paul, losers are where we all learn, yet posting losers is difficult. Everyone wants to be a trading genius, no mistakes. Yeah. I know I do. You want to know how often I have a flawless day, Paul? Every day, because I'm freaking perfect. No, not really. Guys, I make mistakes all the time. I made a mistake in class the other day. Put my stop in the wrong spot. Called it the wrong trade. I needed Hunter to point it out and show me the winner that I missed. So it happens, guys. Be human. Guys, crude oil is giving nothing. You knew about it, you saw it, and you had rules to not trade into it. Nothing but chop. Nothing to do, right, Pete? No clear path up. No clear path down. So here's one of the cool things that the software does for you. Can you guys guess what range it needs to break out of for me to feel comfortable risking my money? I want to make this save. It's clearly defined. I want to get above resistance or below divergence lows. And then my path will be clear and I can find an opportunity. But until that happens, guys, it is wish in one hand, poop in the other. Tell me which one fills up first. That is what my father-in-law used to say. The S&P is trying to give us momentum, right? And it's given us that clear path. And I've got an area of support inside of triggers. Separation is there, 4 triggers above. Do you guys see that blue line inside of triggers? If it hits this entry, my stop will go 4 or 5 ticks below. Any separation is momentum. 4 trigger lines above the fib says clear path. Trigger lines define the retracement zone. Areas within define where it's most likely to bounce and continue with this look. There it is. Initial stops are 1, 2, 3, 4, 5 ticks below. First target, if it gets hit, will happen before the reversal bar even prints. So if we make it to 63.40, ladies and gentlemen, that's our first profit, $100. 42 represents $200. We're just going to play this KISS plan. I had momentum, 4 triggers above, pull back to the area inside of triggers. Stop is where the market shouldn't go. Is everybody with me here? Does it fit the plan? Does it fit the KISS plan? So now it's just up to the market. It either goes or it doesn't, right? Got less than 2 points of risk. Need it to hit that first profit target. Come on, buyers. Look at that large chart. It is up. It is strong. It's all above the fibs. We just need them to kick in, push up. Give me that first profit target. I'll go to break even. From 37, 1, 2, 3, 4, 5 ticks below the triggers where the market should not go. Guys, this does not guarantee a winner, but this is a pattern that typically wins more than it loses. This is a pattern that I can test. This is a pattern that's repeatable. This is a pattern that is rooted in advantages. And I either get stopped out 20 to 30% of the time, because anything that wins 70 to 80% of the time is obligated to. Oh, there we go. $150 loss. I'll take that all day long. All day long, guys. It fit my rules. I had momentum, separation, 4 triggers above, pull back to the area, stop where the market shouldn't go. That's it. Rinse and repeat. And now there's some of you in the room that are saying, oh my gosh, he took a loss. The software must not work. He took a loss. He must not know what he's doing. Guys, anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. Just remember that. Pete, you got the audio back. Once it gets below, I don't know if, when, or where, guys. Now they're trying. You can see them pushing. They're trying to get above that fib, but they're not yet. All right, what do you guys want to talk about? There's your crude oil. Trend is down. Smalls are up. Strong side of the smalls. It's going to be a tough fight. NASDAQ hit a zone with strong triggers. S&P trying to get to that zone with strong triggers. And this look tells me that trade we took is probably still going to find its way up, but we'll see what happens. Guys, I'm going to take a few minutes. When I come back, let me know what we're talking about. It's really just a matter of doing the same thing over and over. Taking the same entries, managing it the same, doing the same thing so it becomes repeatable, so it becomes consistent. Not getting the supply-demand zones on your 15, what can you do? Jerry, go to your drop-down. Are they both activated? You have market dynamic? Okay, so let's do this. Go to the funding page and go to just go ahead and click on that NASDAQ futures workspace and let's just reload it. It's so much easier to rebuild in TradingView, right? Hit copy, hit save, and it'll bring it up in the browser. And then once it's up in the browser, it's going to show up in the drop down here. So you can just click it. And I'm going to open it anyway. Oh, nope, cancel. That's S&P. So if I click it, I'll do it on my NASDAQ chart. It'll reload my charts. And then it does have a micro. You'll want to take this and go to 2. And then it's just a matter of putting them back in place. But that should get you all squared away. Guys, I'll be back in about 5 minutes. Go stretch your legs. Get a drink of water. back in and taking a look at it. This is why stops go where the market shouldn't, because there's no reason to take a big loss. There's no reason to give up $500, $600, $700 hoping that it goes up. And then it reverses, and it gave odds favorable momentum. And you've got areas inside of triggers and where the market shouldn't go, and we'll just see what it does. Pete, you said you caught the breakout. Congratulations. Odds favorable, 3 triggers through, pulled right back to the mid band. See what happens. What do you guys want to talk about? And Jerry, you got that to work? Awesome. Good stuff. Just a little different look, isn't it? It's a little different look on TradingView. It's the same concepts. If my market is trending strong, if there's nothing in the way, let's find an opportunity, guys. Maybe it's a pullback right to the HVA, right to the zone. Close on the correct side. You like it better? You're making more money with TradingView? Jerry, I am, man, I hate to admit this. 15 in 1 minute. Yes, Steve. 15-minute big chart, 1 minute small chart. And then, Steve, we've got all the workspaces pre-built for you, too, if you need them. No, Ninja's still there. It's right there. Oh, right on. Ninja's still a thing. So, great question. Ninja Trader is a little bit glitchy, and has the potential to crash. That's the biggest, really the only negative. I'm a big fan of both, but every now and then Ninja Trader crashes. For in regards to the advantages or the disadvantages, Renko bars tend to be a little faster. So when you talk about big chart, little chart, inside of 1 bar, on the big chart, you'll see the full move over here. So it tends to move a little bit faster, which is okay, because if you're on crude oil, if you're on the S&P, it's still not crazy fast. Because TradingView uses minute bars inside of 1 bar on TradingView, you get 15 bars on the smaller chart. So I think it moves slower. So if you're one of those people that you're just like, gosh, the market moves too damn fast, TradingView does wonderful things for you. It really does slow the market down. In regards to limitations, what you're going to find is that the only limitations, and this is, I guess, my opinion, is that the only limitations is going to be your ability to sit still when there's nothing to do. Most limitations are self-imposed. The software will show you precisely where the market is most likely to bounce. The indicators will tell you the expectations. They'll keep you focused on being on the good side of things. And there will even just be a plan with a checklist to get you in. Live feedback every day. The hardest thing you'll ever do is absolutely nothing. But when you have momentum and 2 triggers through and a pullback to an area inside of triggers, it's not too darn hard, is it? Is it, Victor? Great job. And Jerry, I agree. I think anybody can trade NASDAQ on TradingView because it's minute bars. It doesn't move any faster. A minute is always a minute, right? One thing that you will find, Jerry, and this happened Friday, is if the market is especially volatile, If you're getting 10 to 15 points inside of a minute bar, Jerry, your risk gets huge. That's what it was for me Friday. The risk was about unmanageable on most trades. It was risking 70 ticks on a trade, and I'm just not willing to risk that much. So if the market is especially volatile, minute bars are going to increase risk. But I think if you're doing the comparison of how often that happens, it's a lot less. Victor, this is just awesome. And Didas Gupta, this is the exact same pattern again. First, it's momentum, separation between the small and large. And then when you reach a line, you start counting triggers. He has 2 through, 2 below, which lets him know this has the potential to break. Because of his awesome entry, he's paid quickly, and everything is up and above, and he's got nothing to lose here. And this is what we talk about. When everything is going up and strong, guys, once these small triggers roll, you've got to wait for a deeper push, and you've got to get to an area, and you've got to look for a close on the correct side of those small triggers. And then sure enough, that 1 minute chart tends to head its way back up with the large. That is the S&P. NASDAQ did pretty much the exact same thing, but it's right into trouble. And we'll just see how it reacts at trouble. You're excited to trade the Nexgen funded account next week? I'm excited for you, Jerry. Can I tell you? I'll let you guys in on a secret. So my job with the funding company is, as I watch you guys, I am literally the eyes in the sky. And when you are trading in the funded company, I kind of watch what you do. And I'm going to show you guys the biggest killers that I see right now. So take this for what it's worth. One of the biggest things I see is people see a red line and go short. And they go short against trend, and they go short against momentum, and they go short against the small triggers. And guys, I watch people give away hundreds of dollars fighting these triggers on the large chart. So for those of you that are doing it, fighting these triggers rarely works. One of the other things that I see is the I hope this area breaks trade. And I'll see people trade short directly into trouble and then hold forever. It's got to go down. The triggers are down. It's got to go down. The background's red. And I'm watching people give away $500, $600, $700, $900 at a time. So, Jerry, as you get into it, and really for everybody, small triggers, I don't care which chart it's on. If you fight the small triggers, you're more likely to lose than win. And if that's the only thing that you adhere to out of anything that I teach every day, don't fight the small triggers. Guys, you're going to be all right. Started with a 150. I like it. The drawdowns are so generous, Jerry. And the fact that I forgot what I was going to say. The rules don't change. You know you can show me a picture, right, Jerry, instead of making me hunt? Is it a good, right here? So look at, and this is a good one for you. Look at those small triggers as you get to the HVA. So do you notice, Jerry, that one, the HVA is on the wrong side of all the triggers? This green HVA right here, I don't have any rules for that. I'm not coming from a 15-minute zone. I don't have strong triggers to buy a pullback. I don't have a trade there, Jerry. I don't have rules. I don't have a plan for that one. So HVAs. Paul, yes. Both charts. So HVA trades, Jerry. Well, the HVA trade, the true HVA trade, you're welcome, Paul, means that you reached a zone on the 15-minute chart, that your 1-minute small triggers turn, and then you buy or sell a pullback to the HVA. So let's see if down here, where we were coming off that zone, if we got one. What time was that? 8:45-ish? Let me find that low. Here we go. So here's my zone. That's the low right there. I've got a zone on the 15-minute. And then what I would have needed is some sort of pullback to this high volume area line. So Jerry, the HVA trade is, let's do it this way real quick. The HVA trade is going to be really close to a big chart termination. And if you go through this journal, Pete caught the perfect one the other day. I remember this one. First it's a zone, then it's a roll, and then it's a sell. So that's your HVA. Does that make sense, Jerry? You probably already know this one from years with Nexgen. Let me show you the other one that uses the HVA line. And it's just a momentum trade is all it is. It's just a momentum trade. But Jerry, what this is when the large chart's screaming up, right? And there's nothing in the way. If you have strong triggers on your 1 minute, and only if strong triggers, snap back and buy an HVA. And it's just a momentum trade using that high volume area line. So if you go through and look at TradingView, we'll see if there was an example in here somewhere. There's one using 1-to-1s. Looking for strong triggers. Strong triggers, break above, snap back to the HVA. That's it right there, Jerry. Strong triggers, break above, snap back to the zone. That's your momentum trade. And then once you get weak triggers, no more momentum trades. And now we are currently trying to figure out what the market's going to do off this termination. So Jerry, zone hit, right? There's your HVA, triggers roll. So the true HVA trade would be to sell a pullback to this HVA. And then if everything becomes strong down, the next trade would be the momentum trade. And we'd probably be looking to get somewhere around the mid band. So we'll see if it comes to fruition. But look at the large chart. Large chart is up strong. I want to get these over to the center. There we go. Sold the HVA. If it gets beyond this zone, back above these triggers, I don't want it. And there we go. That's over quick because look at the large chart. No reason to fight those triggers. There's just no reason. When they're this strong up, let them slow down. And you can see what they're doing. You can see that there's a huge fight, right? This zone won't let it go down. This zone won't let it go up. We're defining our areas. Yeah, don't fight triggers. And the same is true here. It's super strong up. And crude oil, All right, trading view people. Let's talk about these tails on a large chart. Tail, tried and failed. Tail, tried and failed. Tail down, failed. Tail down, failed. Tail down, failed. Tail down was the retest before it went up. You guys see it? There it is again. There it is again. There it is again. These tails are very, very telling on a 15-minute chart because they represent where they tried to push down and then they finished up higher. And they tried to push up and they finished down lower. So when you see those tails that can't get through the area, that's why we let the meat of the bar, you can see it happening live right here, letting the meat of the bar get through before we look for that entry. Pete, odds favorable. It looks like a clear path, but Pete, you've got the fib right here, but it's not showing up on your large chart. I don't know if that's intentional, but it doesn't change the fact that there is a fib right there. You were in before the fib, jumped in directly into trouble, and it bounced and turns into the trend trade, and then you jump in after trouble with a few ticks to get to Fibonacci, and it looks like it's struggling, couple ticks here and there. Nice job, Pete. And then Andy, termination, reversal, strong triggers. Looks like you may have had 2 triggers up. May have had 2 triggers through. You say 3 were through. I don't believe that's true. Andy V, see your large triggers way down here? And your small triggers are up here? It almost looks like none of the triggers were through. You do have momentum from a termination. There was your pullback to the mid band. There was the, oh no, we forgot Andy. Make a little money at 95. Make a little more at 07. 3 were through where? Help me out with this, Andy. Let me show you what I see. So this is your entry bar right here. I can see the blue arrow. Do you see your large triggers all the way down here? I want to make sure that we're looking at the right chart to count triggers. Does that make sense? It's a beautiful trade. They were just making the roll down here. Large move over as data printed. Okay, so that was at 10:04. At 10:10, I still don't have 2 of my large triggers through. I believe you. I'm not calling you a liar, Andy. I promise. Now over here, it's a different look. But on the large chart, and let me do this, because it looks different in the moment, right? My goodness. So here was crude. I'm going to circle your entry on this chart. You entered at 65.80. Do you see the circle? Does that help with the look a little bit? And you can even see your synthetics are way, way, way down here. But at your time of entry, 1, 2, 3 on the small chart. Do you see it, Andy? So you're not mistaken. It is 3 triggers on the small chart, but it takes 3 triggers on the large chart where termination conditions are defined. Does that help a little bit? You caught the breakout. You definitely caught the breakout. You had every indicator up. Good stuff. And let's go back and celebrate a little bit more. Look at that hold. It says 6607, 6607. See, one in at 80, one out at 95, and one out at 07. Just large chart shows it better. Something's wonky on the small chart, but look at that, right to the fib. Beautiful, beautiful, beautiful. Andy, I'm going to respectfully disagree with you because there's just no way that your large triggers jumped 15 points or 15 ticks up in this one bar. Because if I'm looking at them, they stay below that fib. This is the first spot I get 3 triggers in. Maybe your small chart is weird. Oh, hold on. Andy, did you enter right here at 80? Uh-oh, I think we just figured it out. I think I just figured it out, Andy. You entered here at 80. Your markers are off. Oh, Andy V, your markers are off. Because there's an entry at 80. Does that look more like the entry you took? 3 triggers through. Odds favorable. Out at 95. Man, Andy, I apologize. If I look at your chart here, it doesn't make any sense. But if I go to where 80 is, I thought maybe you got in at the top of the bar, but you didn't. You got in over here. I don't know why they're running a little weird. I don't know why your indicators seem behind. All right, so now I have to change everything I said, Andy. 3 triggers through, odds favorable, pull back to the area inside of triggers, and you just absolutely rock star it up to 6607. Nicely done, and my apologies for the confusion. Every now and then I have to play my human card. That makes so much more sense from there. But your markers were telling me it was there, and that's what confused me. So, beautiful. Beautiful, beautiful. I make mistakes, guys. All right, Ali, no odds favorable. Let me see where you're getting in. Over here. Strong bottom as price bounced off the mid band. Large triggers were a full bar away. It can't be a 50-50 trade if none of your trigger lines are through resistance, Ollie. Does that make sense? It can't be a 50-50 trade if none of your triggers have broken through that fib. And they hadn't yet. But let's talk about how great this is. So first, it's a weak top. And guys, when you have a reversal that comes not from Fibonacci, the market is more likely to just continue with that trend that's been going on. And Ollie doesn't jump in at a mid band with the large triggers a full bar away, but when all of his indicators go back to green, perfect entry at the bottom of the window. I love everything about this trade. I just can't call it a 50-50. What you've done is you've recognized a pattern and you've caught it when all your indicators agreed. And did they break that divergence high for you? they tried and failed at the divergence high. So it looks like they got your target. Nicely done. And guys, this is just a pattern that you see a lot. And I'll show you a couple instances where bad top, here's the same pattern. Not from a termination, hits, and they try to continue up. And then not from a termination, hits, they try to continue up. A little more of a fight, but eventually they go because that's the fib they wanted. And Ollie, you recognize that pattern beautifully. Bad top, mid band tries to continue up. Bad top, mid band fib tries to continue up. Do you guys see that pattern? When we talk about patterns repeating themselves, this is such a great example. Bad top, pulls back, continues up. Bad top, pulls back, continues up. So when I talk about bad top, for you guys learning the language, what I'm talking about is there's two tops that you can have. You can have a strong top, which means that a termination condition reversed the market. First it's a termination, then it reverses the market. First it's a termination, then it reverses the market. Or you can have what we call a weak top. And a weak top is not a termination condition first. And from weak tops, very often, the market continues in the direction of the trend. And there it is right there again, right back to that mid band. And sure enough, it goes. Great trade, Ollie. Great trade. Victor. Nothing here until we get some triggers over the red fib from the 5-1. Sit and wait. You take the long, got paid, pulls back. See how your large triggers never blink, Victor? Pulls right back to support, and it's just continuing up. So we'll just see what happens. Great reads. Nice long in there too. Miss Jen, 3 triggers through. Odds favorable. Pulls back to the area. Oh, there's that darn divergence, Jen. And then once you get the reversal bar, then it starts up and you catch it. Nice job keeping your head in the game. So for those of you that are new with me, anytime you only have 3 or less triggers through the area, it's not a clear path yet. That divergence is the biggest killer of these trades. That divergence is one of the biggest reasons that those potential to break trades fail. And then Jen, do you notice how your smalls are not outside of the large as well? So you're giving up a lot of momentum, and that's your red flag that it may push lower. It's still a good look. It's coming from the termination. This is where that confirmation bar may pay dividends for you. Does that make sense, Jen? Saying to yourself, this looks awesome, but my small chart isn't perfect. And that's what you did, and you still took it. You just had to take the little hickey before it stopped out by a tick. We call those shenanigans, Miss Jen. Sometimes it happens. Way to keep your head in the game and get it all back, though. Nicely done. 2 triggers through the divergence high. Do you guys see it? Momentum. Only 2 triggers through. Without divergence, and then there's the divergence, and let's see if it goes lower. Only the potential, and sure enough, there it goes. I know this is not baseball, but you batted 1,000 on Friday. Good reads and good trades. Today you're batting 600. 2 out of 3 with looser management, small loss. Great job, Victor. Do you know that I know traders, and I've had days, Victor, I think my lowest win percentage and still profitable was somewhere around 33%. And it's because of the management, right? It's because you know where the market shouldn't go, because you understand, and you don't have to take big losses. Guys, big losses are for people without the precision that Nexgen gives you. Big losses are for people that rely on hope rather than just a pragmatic approach. Where's my edge? Where's my edge gone? Um, and this is such a great example. You can see the fight. And then they push one more time. And then there it is. So great entries are making it easier to lose less, Victor? Is that what you're telling me? Getting in at the areas instead of, yeah, it's awesome. But we all have that realization. And we all have it at a different time. Because what happens is, yeah, instead of here looks good. So when it looks good, right, and everything's nice, and let's just pretend that hit the mid band. If you get into the mid band, you've got 4 or 5 ticks risk. If you get in on the confirmation bar, you've got 12 to 13 ticks risk. And you have robbed yourself of 13 ticks worth of profit. And I think that's one of the biggest things that these entries do for you, is they do reduce risk dramatically, and they do increase profit potential. I've got a picture. And I want to show you the 3 most common entries. Let me find it. I know that I have it. There we go. Victor, I won't tell you who in the room this was made for, but so there's 3 entries that I see you guys take all the time. The first one is the jumping in right at the top of the move. I don't want to wait for the reversal bar. I'm afraid that it's going without me. Guys, if we're using the idea that stop placement goes where the market shouldn't be, all you've done is increased your risk dramatically and reduced the distance to the target. If it almost hits your entry and starts the other direction and you jump in fearfully, all you've done is increased your risk and reduced your distance to the target. Getting in at the areas inside of triggers results in the lowest amount of risk and the furthest room to the target. And then the one that I didn't show in here is if it's the perfect trade, if it is the perfect high probability trend trade. Let me go to a picture real quick. If everything is beautiful and you don't trust your methodology yet, you don't trust the entries, you're not on board with the rules, and you say, well, I'll let it go in the direction of the trade, all you've done once again is increase your risk and decrease your profit potential. And I know that it's hard to get on board with that as a brand new user, because you want me to what? You want me to buy the market when it's going down? But guys, look at the large chart. It's hard. It is so hard to see change on this large chart. So we use the 2-part. Inside of that 1 bar are all of these bars up, all of these bars down. Guys, you can be at profits before that big chart bar ever stops printing. So Victor, I love that you're having that epiphany. I love that you're having that realization. It takes a little bit to trust it though, doesn't it? And guys, I'm not afraid to say that. It takes some cojones to buy a market when the perception is that it's on its way down, or to sell a market when you feel like it's on its way up. But with momentum, right? Let's see what this one does. Because it's from a weaker top, you got to watch that mid-band. But it fits, right? There's your momentum. All the triggers are below, right? That weak top is a pivot stop out, absolutely. So they reached the divergence high. They exceeded it a little bit. Small triggers got through. No. Where's your termination, Jen? So great question. Here's your area. The divergence high. Do you see how the small triggers got through? So the recipe is a no triggers through. This one got 2 triggers through. And when I have a weak top, Jen, that mid band, whoops. When I have a weak top, very often that mid band is a source of trouble. Which means this is not my favorite trade from a weak top. I like to see some trigger lines get through that mid band. I like to see them push below that mid band. Does that make sense? Because of the weak top. Guys, if you're brand new with me, you should have been in and stopped out. And then as you grow with the software a little bit and you get out of that best of the best and you start growing and getting nuance, you'll start to recognize that one a little more. But that's that pattern. If it's a weak top, it's more likely to bounce and continue. If it's a weak top, more likely to bounce and continue, more likely to bounce and continue. Does that make sense, everybody? Good stuff. Now, if we got a third divergence to the downside, 3 divergences in the same price range changes it. But just because it's a pivot stop out doesn't make it a strong top. It still has to be a no triggers through termination. Look at that. Weak top, continuation to the next fib. Now we'll see if that's where they wanted to stop their escapades. You guys want to see something neat? I think it's neat. You may not think it's as neat as I do. See if we can find a good example. Find it both ways. Every morning I say decisions are made at key areas, guys, and I want you to see something. Even with all the momentum in a market that continued up, do you guys see that tail? That's the retracement on the small chart. That's a fight right at a fib. They start to get up, the triggers don't get through. There's your fights right at the fib. When the fib breaks, they come back and treat it as resistance, and that's your easy money. And that's your easy money. Mid-band, triggers don't follow, down it goes. And you see it again. There's your fights right at a fib. There's your fight at a fib. There's your fight at a fib. There's a fib breaking, behaving as support. And guys, you see it over and over and over and over. You know where these areas are, and you know that they can create problems for you. The easiest trades you'll ever take, burn this image in your head, trading away from Fibonacci resistance with momentum, having not reached the next area. Guys, there's your pullback to the area inside of triggers. That's the easiest trade that you'll ever take. That's the one that typically wins quickly. That's the one that is just insane. Weakness, right at a fib. Look at the push. Price reaches Fibonacci support. Large triggers are above my reversal bar marker. Let's see if they close the gap to those triggers. That's your gap theory, ladies and gentlemen. Oil just went crazy, didn't they? Somebody with a bunch of money wanted it to move quickly. Yeah, Pete, for sure, right? We'll come back and see if it happened. Now we've got a strong top, Miss Jen. 3 triggers through, no divergence, pull back to the areas inside of triggers, stop where the market shouldn't go. Strong top, strong triggers. There's your range where if it's going to work, it's probably going to work from there. If it's not going to work, there it goes. That's pretty ugly, isn't it? Only the potential to break, though. Only the potential. Not a high probability trend trade. Dun, 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 dun. Guys, what do you want to talk about? What's on your mind? What do you need help with? What are you working on? What are you looking at? They haven't done it yet, but they haven't gotten through the terminations. Sometimes they just push a little further, and down they go. Those sons of bitches. Pardon my French. Might have had to go twice on that one. Sometimes you do. Sometimes you do. Trading view, folks. What do we see? There's one of those huge tails. They tried and failed. All right. So trading view people, let's do the read together. Let's go through it. All right. The trend is up. Green background. Where are my small triggers? They are up as well, guys. There's your imaginary line off to space. Price is left of the small triggers, and those are strong. Do you guys see how it's up or nothing? Shannon, do you see it? George, do you see it? It's up or nothing, guys. So what's my problem? Need to make sure I'm north of 66.60. And I've got this in my way. So if they push back lower, not interested. Really want to see them momentum style off of this and push up. So we're kind of like, all right, I'm above trouble. They didn't quite give you your momentum trade, Jerry S. Do you see it? Strong triggers, above trouble, strong triggers. I would have wanted that pullback right there with strength. And they missed me by a tick. They did that to me this morning as well. That's crude oil. NASDAQ, the zone holds. It sure did, didn't it? But not before a dance. So now it's up. Weak side of the small triggers that are still up but trying to turn. Small chart is nothing but strength to the downside from the zone. With this look, you still have to be aware. We'll see what happens. Hunter, haven't been going? Oh, you had a fib. Hunter, you paid extra for the fib. Did you? I reloaded everything over the weekend. I deleted everything in my workspaces and built new ones. Jen, you said we match, right? Did you give Hunter the dud copy? You don't have the fib either? Right on. I did a 100% rebuild over the weekend. I think the market is impressed with Hunter's prowess and said, you know what, let's give him a fib. Did you guys know that Nexgen is 28 years old today? Nexgen Software Services is 28 years old today, guys. How cool is that? That's older than some of you. If you know anything about this business, Guys, if you know anything about this business, there's not a lot of people that have made it 28 years. There's a reason we're still here. Thanks, guys. You tell my brother to come look in the room. You looked at the software over 20 years ago. Did you really, Crowbar? That's amazing. And we're still here. And we're still doing the same thing, right? Should have bought it. Well, it's not too late. You still can. You still can. Guys, and the cool thing is Nexgen does the exact same thing that we did 20 years ago. Let price reach an area. Like the recipe has literally been the same for 27 years. Whoops, that's not the right picture. Sorry. That's a good picture, but that's not the right picture. If I hit something, stop. It either rolls or it breaks. If it rolls, there's an HBA trade, and then it turns into a trend trade. And then I hit the next line and I stop again, and I wait for the reaction. It either rolls, and I look for the HBA trade, or it breaks, and I go back to the trend trade. And guys, it has been the same concept for nearly 30 years. And the reading indicators isn't difficult. The finding your trade isn't difficult. The most difficult thing that you will ever do is nothing. And I'm going to tell you guys that. The most difficult thing you will ever do is look at your checklist and realize that your rules aren't met and still not take a trade. How hard is that? Because what if the market goes anyway? What if that area breaks anyway? What if that line on the wrong side of triggers holds anyway? Guys, trading is about an edge. Nexgen has spent 28 years defining it, refining it, making it more noticeable, and keeping you from taking long trades into things that can stop the market, and keeping you, helping you, not take short trades into areas that could stop the market. So much opportunity every day if you're just patient. And then sometimes, shenanigans. I have momentum, don't have a clear path. There's those divergences that ruin the good time more often than not. Huge bounce. Guys, remember when we drew that square and said they're more likely to close the gap to the triggers? They did. I have a crystal ball. And then new people, you guys want to see something awesome? I haven't taken this picture in a while. This is crude oil, 2025. Bum, bum, bum. I'm going to go to the instructions, and I'm going to go to termination conditions. So, like Didas Gupta, this is what I really want you to see. All of you new people that are like, man, maybe he gets lucky. Maybe whatever. Check this out. I'm going to go to termination conditions, and I'm going to scroll down, and I'm going to take this picture as well. And this is crude oil in 2021. And this is crude oil 38 seconds ago. Price reaches Fibonacci resistance, doesn't break, pulls all the way back to support, almost the midband, support, almost the midband, closes the gap to the triggers, starts back down with weak triggers. Do you guys see that? This is the same look 4 years apart. Pretty cool, isn't it? And then part of your brain goes, maybe I don't want to go long. I've seen this before. And that's really what we do is, guys. It is finding a pattern that you can prove wins more than it loses. The high probability trend trade, everybody can prove that it wins more than it loses. It's not hard. Just go do it. Go scroll back, circle those tails. And then you're going to take the next month, 2 months, however long it takes. Some of you have been hurt before, to trust that the pattern wins more than it loses. To trust that with strong triggers, you can take a pullback to a zone or an area. To trust that fighting these triggers is a surefire way to drain accounts. And then once the trust comes, the execution becomes easy. You chomp at the bit. You can't wait. You can't wait to take that trade with nothing in the way. You can't wait to take that trade with momentum. And even more so, you become excited to sit on your hands and do nothing when there's nothing to do. And we do the same thing every day, rinse and repeat. Hey, John Novak, congratulations. It's been a great 28 years. I still remember. I was living in Phoenix, Arizona. Going to a trade school. And John called me and told me that he was about to start this business. And I said, what the hell is a Fibonacci? 21.3 has support. Should it be superimposed? So, Jim, that is not 21.3 because it doesn't extend all the way out to the right. So that is probably 5.1. That's from the 13.2. So Jen's 13.2 and mine as well didn't have it. So let's reload historical data. I don't appear to be getting any of my 13.2s on here. All right, we're going to reload it real quick, Jen, and see what happens. I'm going to see what mine does. I rebuilt every one of my workspaces this morning, redid everything. 100% fresh, brand new. 1 second. I can't do it while it's calculating. As soon as that's done calculating, I'm going to go through what John's talking about. That's boring for everyone. This is part of it, isn't it, Jen? Sometimes your car needs an oil change or a tune-up. That's all this is. There we go. So right-click indicators. But it should be under the regular, right? Excuse me 1 second. Spared you guys for the sneeze. John, what am I looking for? For you guys that don't know, I'm not a tech guy. Data series, input series, 13.2. Pro Trader synth new. Time frames, 21.3. 8 range, 5.1, and 13.2. Plot support and resistance. Look at that. Man, I'm going to make a tech guy out of you. Check it out. Plot support and resistance. So I'm going to do that and hit apply and OK. Mine wasn't either. On a 13.2 chart, it doesn't need to be active. You have Pro Trader for that. All right, Pablo, let's see what you have going on. Market order rejected. Count is only allowed to liquidate positions. Did you log into your... Oh, there we go. Pablo, John just said we're having server issue with the CQG data. Everyone has that problem at the moment. Hundred plus of the people hate you on your birthday. Nobody could hate you, John Novak. John, did you see this from the user guide? The same picture 25 years later. It's all about patterns. Still not there. All right, guys, 11:08 in the a.m. I'm going to take 3 or 4 minutes. I'm going to go stretch my legs, scratch my dog behind the ears. When I come back, the room belongs to you, whatever you want to talk about. So post pictures if you have them. Post questions if you need answers, guys. If there's something going on that I can help you with, all you have to do is be vocal. And John, you made the pick. You know it's amazing how many times it happens. Why I say if weak triggers go short at the high, you make more. That was strong triggers at the high. I like Jerry S. Did you see that he said if it's weak triggers at the high? You guys remember that one on TradingView that looked like the good HVA, but it was screaming north? There's a good lesson there. Good lesson there. How to commit financial suicide. Trade against strong triggers. Yep, both ninja triggers at the high are definitely strong, John. I agree. I agree. All right, guys, I'm going to leave you with it. We'll see what they come up with. I'll be back in about 2 or 3 minutes. Stretch your legs. Let's do that home stretch thing. Let's get to where we need to be. So currently, they're trying to create momentum, aren't they? And all my triggers are above support, which means support's likely to stop the market. We'll see what happens. We will see what happens. What would you guys like to talk about? Man, look at that. How cool is that? You guys knew exactly where the market might stop. You guys knew exactly where the market might bounce. You knew exactly where to not take that long or where to not take that short. And now we're just waiting to see, what are they going to do? Are they going to continue up? Are they going to give me momentum? Am I going to get a clear path? Are my rules going to be met? I don't know. This is so exciting. Did you guys know that you're not the only person that knows about these fibs? There's a really cool story of when John Novak, 28 years ago, was created. Well, actually, it was probably 30 years ago. I think it took a couple years to get it right. He had a buddy in the pits in Chicago whose business was to know the business of the people that move the market and where they are going to enter, exit, all that sort of stuff. And obviously, you can't give that away. But when John was creating the algorithm for Fibonacci and for the Nexgen, for the T3, he would send his levels to that guy. And it was when the guy responded and he goes, "Hey, John, you're within 50 cents, right? And look at it. You're within 50 cents. You're in that range. You're right where they're going to be doing business." That's when Nexgen was born, guys. Because they break, but they typically break with momentum. And they typically hold with 4 triggers not through. Pretty cool. And that entire run up this morning started with a no triggers through termination that reversed the market. Pretty awesome. I'm still floored every day at how effective Fibonacci can be. What are we talking about, guys? Mr. Dasgupta, first day, it's a lot to take in. How you feeling? Learning the language first, guys, I believe pays dividends. Learning what it is that you're looking at. Trigger lines, Fibonacci. And then just keep it slow. Learn momentum. Tracking, but the Renko is new for you? Right on. It smooths things out in the language. Absolutely. Let me show you what I have in my arsenal. One thing about me is I write a lot of stuff. I put this one together. So this is your NinjaTrader. You would like it on TV? No worries. Pop on over. We talk about both in the room. I'm not afraid of either. I do all of my trading on TradingView now. But this is kind of the gist of what we're doing. Talking about momentum and path. You do your charting on TV? Right on. Do you have our indicators up and running on it yet? Not yet. Just for language purposes, there's the TradingView indicators, all of the names and everything. And what you'll find is that the looks are the same. Triggers are triggers, one-to-ones are one-to-ones, divergence is divergence. So all of that is very similar, even starting on NinjaTrader. And then the only difference really is using zones. And these come from Chart Prime. They're not a part of our indicator package. And using those the way we would use Fibonacci. So if you're comfortable and familiar with TradingView, we could talk about either. We could talk about both. Just let me know what you need from me. That's always my goal. The more vocal you are, I'll get you anything and everything you need to evaluate the software. Chart Prime is a paid indicator. It's about $50 a month. Because the programmers haven't gotten Fibonacci yet, but if you look at how effective the supply and demand zones are from Chart Prime, it's a really good investment, and that's what I use on my chart. There are free versions that are a little more resource heavy or maybe not quite as accurate. Where are we at? But those are pretty effective. And if this is your career, if this is what you want to make a living out of, so I always tell people, you'll never meet a professional mechanic with cheap tools. It just doesn't happen. And there's a reason for that. It's how you're going to make your living. But there are indicators that are free if you wanted to use those. Absolutely. What you will need to do is do me a favor and your TradingView username. You know where to find that. Send that to Jason in Tech. Go over and start a ticket in Tech. Send it to Jason, and Jason will get you all of the indicators loaded. And then once he does that, let me give you the link. Straight from the funding site. All of your workspaces are pre-built for you. NASDAQ, S&P, crude oil, gold futures. And all you have to do is click on it, and it'll bring it up in your browser. And if you copy it and save it, that's when it shows up in your drop down over here. So you can do it. Jason can help you with it. We can go through it in the room as well. Okay, so you're good with that. There's like 100 million users. I think TradingView is pretty outstanding. And then once Jason gets your TradingView ID, you'll get all of these under invite only. Cool. And I love talking about both platforms. I'm a huge fan of talking about both platforms. Guys, we reached the zone. Now the small triggers are down, even though the trend is up. I'm on the strong side of the small triggers. I'm going to see if I can find a little something down. Right? Really strong triggers. If we break and pull back, we could take a momentum style trade to try and get a little lower. Good stuff. Good stuff. How we doing, guys? And then the same thing happened. From the zone, the triggers roll, strong side of the triggers, pulls back to a mid band, close on the correct side, comes back for anybody that it forgot, and now the market's heading down. How's that for a range? Oh, no. You guys, it's impossible to hijack the session. The first 30 to 40 minutes are a little bit lecture-y, where I talk about the very basic rules. The next 2.5 hours are designed to be a discussion, guys. The more you talk, the more you ask, the more you point out, the more you do, it's impossible to hijack this session. I promise. The most amount of charts that I have ever had one person submit is 77. 77 charts presented in a day. Every one of them was annotated, and every one of them got feedback. Yeah, someone who's shy has the same question, without a doubt. I didn't ask questions when I started. John told me to, but I didn't. I blew $5,000 in about 2 hours because I didn't want to ask what I was doing. Then I started asking a lot of questions. You'll find that everything goes back to 3 things. Momentum and path starts it, and once it's there, you're going to find an entry. And that's kind of what we do, is just we work on the looks until they're clear. And right now, there's just nothing to do. And now on the S&P, termination, they tried to break and couldn't. And now they're starting to push. John's waiting for that HVA. You may not get it, John. They might just momentum trade right off the bottom there. We'll see. We'll see what happens. $13.2, is it support? No momentum trades for you? Oh, see, you have that fib that we don't have. Waiting for the breakout. I'm going to have to rebuild again, I guess. We'll figure out what happens. Look at that. Oh, awesome. Tech team is amazing, aren't they, Jen? Little story most people don't know about John and I is we both grew up in the service industry, and that has definitely carried over to the way Nexgen treats you guys. And John, you don't run tick replay on the big chart? The problem is even with tick replay, I don't have that. So I've got something in my, got something on my chart that I'm going to have to fix. You're not getting any fibs on your 13.2, David? Is it red or green? You see the background? Can you show me a picture? Is it the gray background? Is it... Okay, cool. Yeah, see, John, yours doesn't show. My first go-to, David, is always try to reload the template. Oh, so if I take the tick data off, we'll see if it comes up. My first go-to, David, is always reload the template and see if that fixes. But it depends on whether or not you've got the colors on the background. No. All right, guys, I've got 42 of you in here. Is it possible that out of 42 people, nobody has a question? You were getting fibs back here. Let's try this, David. Just for grins. If you right-click on your chart and go to Data Series, make sure your tick replay is in. That'll get all your synthetics in. I would reload all historical data first and see if that affects it. You and I have a very similar look here, but your fibs just seem to have stopped printing, which means that there may be some sort of data issue. So I would try right-click and reload all historical data. And let's see if that makes a difference, David. If it doesn't, you may just want to get with Jason. Because what I waffle around on for 10 minutes, he'll have fixed. And you'll be out the door on your way. You tried historical data? I would put a ticket in with Jason real quick. It'll take him 2 seconds to fix. Sorry. Sometimes I get lucky on the easy stuff, but I'm definitely not the tech guy. But I'm learning more every day. If you would have seen me a couple of years ago, I'm in a much better spot being supportive with tech. Yeah, we're looking all right here. $17. And then John, strong triggers, no arbitrary selling of the HVA. But with the triggers down, that worked pretty nice. I think you were looking at the ES though, right? So we're coming back up. We're getting close to the zone, close to the HVA. Small triggers down, strong. That's your HVA trade. Watch those triggers. If they come up really strong, you may need to wait for a little bit of a slowdown. What can I do for you, ladies and gentlemen? Kind of stuck. Still stuck. All right, this is where I rely on you guys. Give me a little direction. Tell me what you need. On ES on TV, the big chart has small triggers going opposite of the large triggers. Do I wait for them to flip? Great question. So George, when I look at my large chart, the first thing I'm gonna do is I'm just gonna ask myself, what color is the background? And if the background is green, anything that is not a long trade, I feel like I have to be a little cautious for. But the second thing that I'll ask myself, George, is which way are those small triggers facing? Because trading in the direction of those small triggers tends to work the best. So we've got a little bit of conflict, which just means I really want it to look good if I take a short trade. Things that I notice, everything is below trouble. I'm on the strong side of small triggers, but it is an uptrend. So if I were going to come over here and look for a way to go with these triggers, I'm not going to fight these small triggers up. I'm going to wait a second and I'm going to let it calm down a little bit. Does that make sense, George? So I'm kind of I'm just not sure. As long as I'm on this side of these small triggers, I really want a short trade. I don't want to fight these to hope the market goes up. So going with them is going to be an easier path. Brian, which are we talking about? This one? Trading View or Ninja Trader, my friend? Cool. Show you exactly what I see. And just for the sake of being a broken record, I'm going to go back to the recipe for the perfect trade. So momentum means smalls below the large, right? So I could say, Brian, I see momentum. Smalls below the large, larger down, everything's red. Technically, I do have strong triggers. But here's where my luck just runs out. This Fibonacci area that price reached and triggers remained above, that's a termination condition. All of my triggers above these 1-to-1s, that's a termination condition. All of my triggers below resistance, that's a termination condition. And then the large above and smalls below, hell, I don't know if that's going to break or hold. So the current read is, while the triggers are leaning down, I don't have anywhere to go, up or down. And that should say, with no path down, you know that short trade's most likely going to fail. With no path up, that long trade is most likely to fail. With no path down, going short here is most likely to fail. So my current read, Brian, is go make a sandwich, go walk the dog, look over some pictures, right? And if we're playing if then, if Trigger lines break above this level, I'll look for a long trade. If they can't make it above, I'll want to see them get somewhere below here. I'm just caught in a range. I'm caught in consolidation, and rule number 2 and Fibonacci have defined it beautifully. And that, ladies and gentlemen, is worth the price of admission. Time for a sandwich. I always joke, say, this is your go make a sandwich pattern, right? Now, you could try to be the first one in, right? And you could say, whoa, everything's green. I'm just going to go long with a momentum style look. I'm going to try to predict the breakout. And that would be your momentum style look. From a termination, but if you do it, you're hoping. You're hoping something breaks. And not only are you hoping something breaks, you're hoping that the same thing that's held for the last hour breaks. Not just that one line that showed up. You're literally saying, I am such a badass that now everything is going to part and you're going to play Moses in your trading. You ran out of hopium, use it a lot the last few weeks. I still have a bottle under my chair, Victor, just in case. And now look what we're doing. Now we've got momentum, right? Now we've got 3 triggers through. So guys, when you've been in consolidation like this for so long, one of 2 things are going to happen. Your medium probability, try to trade the breakout trade, is either going to absolutely run like it just got set on fire to 67.20, or it is going to fail damn near instantly. This is what we call, and it's potentially the fake out breakout. And when you know that the fake out breakout is a very real scenario, you know to manage assertively. So we'll see what happens. My rules say from a strong bottom with strong triggers, 3 triggers through. If I get a pullback to an area inside of triggers, my plan says that I'm obligated to try the long, to try the breakout. If divergence prints on my small chart before my entry, I have to cancel my entry per the KISS plan. Is everybody with me on that? I have momentum, 3 triggers potential to break, areas inside of triggers. If divergence is true, my plan says no trade, the KISS plan, the plan designed to optimize your chances of success. If this is true, I have to cancel that order. And I just canceled it because if it's true, I can't take it. If it is not true, if I get one more bar down and that magenta line doesn't print, I can get in at the area in size. Sometimes goes to 67, 66, 75 before an up bar, 66, 75, all the way down here. It might, right? There's divergence. My KISS plan isn't true. Wasn't an opinion, right? It wasn't anything other. It is. It's a great looking spot. But if I'm a brand new user, relying on a KISS plan to help me find the best of the best, the highest probability, it tells me divergence, no trade. How come? Because if I go back and I look at trades with only the potential to break, and I see how many times divergence kills them, let's see what happened on this one. Divergence. Push the trade down. That's how that one came to be. Now it could go up, right? I don't know. I just trade patterns. And John, you're right. It's a great looking spot. But as a brand new user, my job is to be as consistent as I possibly can. And if someone else thinks so, there will be an up bar. I like that. If the people in charge want it to go up, it'll start to go up, right, John? So John says, If it's really going to go up, they're going to make an up bar. You guys looking for confirmation, looking for a reversal bar to put your stop behind to get you moving in the direction of the trade. One, two, three. See the smalls through? The large was getting above it until it started going back down. They're working on it, Paul. They've got to do a lot of different things with the server and trying to pull things over. John was explaining it this morning. It's pretty cool. Did anybody follow the KISS plan and avoid a loser here? Nice job, Miss Jen. And the great thing is, that if you were willing to take it with the confirmation bar, guys, if you were willing to take it with the confirmation bar, you never got it. You just never got it. This is a small swing 1-to-1. And John, now you're on the wrong side of everything. So you can trade like John Novak, who's been doing this for 20 plus years and way more aggressive than you ever will be. Or you could follow a simple plan designed to optimize your chances of success, understanding that you don't have to take the same trades as everyone else in this room. And then when you get the time through study, class feedback, continuous practice, you'll be empowered to craft a plan tailored to your personal goals. All the triggers are above 66.75. That's what John is saying. If price reaches Fibonacci support, how many triggers made it through? None. 4 triggers above, this area has the likelihood to stop the market. We'll see if it does. But if you took it on the confirmation bar, you had exactly 2 ticks before you went directly into a fib. Yeah, Paul, it's in the pot. It's simmering. The programmers are doing what the programmers do. I guarantee the second it's ready for public consumption, John will have it in your hands. I think last week he said give him 4 weeks or so. Victor, we're talking about these right here. Sorry, I got sidetracked like 5 times. Talking about these small swing 1-to-1s, Victor. I want to make sure I'm giving the right lessons here. This one right here. Cool. It's done. When this second divergence printed went down, it's done. If it stops printing, Victor, we're good. It's no worries. It's in the rear view mirror. The same thing on the fibs, right? So when this fib stops printing, rear view mirror it. Oh, well then it's still in play, my friend. It is still in play. Yeah. And guys, just be aware, John Novak is trading the NASDAQ. That's what he's showing you in the room, is the NASDAQ. And the NASDAQ flows a little differently, guys. The NASDAQ uses a 34.5 for the large chart. It uses a 13.2 for the small chart. And if I'm not mistaken, John, 3 divergences are not trading directly into yellow 1-to-1s with all the triggers below. Says don't take that trade. You're likely to get shellacked. And you did. And John says, I'll take and manage. John will take and manage. And guys, when you get good at management, there's money to be made in these moves within the moves. But until you can read your indicators really fast, and until you can create expectations really fast, it's going to be difficult. And NASDAQ on Renko bars is difficult. And divergence on only the potential to break is difficult. Don't we just want it to be easy? Wouldn't it be better if it were just easy? What's easy? I'll show you. I'll show you. This picture's even labeled easy. That's your best of the best, right? It didn't break that resistance on the 5-1, which means that it didn't break the resistance on the 13-2, Jen. Or the support, right? Isn't that amazing? And it's still May. 3 divergences in the same price range, divergence from a 1-to-1, wrong side of the triggers. How many reasons do you need to not risk your money? But I hope it'll go up. I hope. My background's green. All my triggers are above 66.75. That's a good start, right? A good start is hell yeah. Small's above, larger up. Everything says this may hold. Let it roll a little bit. Let it slow down a little bit. Look for your continuation style entry, right? Let your small triggers roll, catch your snapback. You don't have to be first. But it all goes back to chart reading. That's what I want to really throw in there. When you are an expert chart reader, you'll find a way to make a couple $100 before low probability trades fail. And it'll all be a direct reflection of your management. If you're not there yet, there's a path, right? Termination. Guys, they're struggling. Everybody in Chicago is about to go out for deep dish pizza, grab a street dog. They're going to eat, they're going to fill their bellies. And then they're going to come back and the market's probably going to giddy up. It's just been a fight. It's been a fight for hours. And some days it is. And some days it's gangbusters. And it's like an ATM. So, all right. I'm going to kill